Hello, everyone. Welcome to Strategic Risk Associates Risk Intel podcast, where we share the latest risk intelligence from experts and thought leaders across the banking industry. I'm your host, Ed Vincent, Executive Vice President at SRA. Joining the show today is Michael Glotz, CEO and co-founder of SRA. Michael, welcome.
It's great to be here, Ed.
Michael, I'm going to get right after it here. You've worked in risk management, enterprise risk and audit for 30 plus years. So let's start with a basic question of why should banks care about enterprise risk management?
Well, it's a good question, Ed, and I would say just broadly, in my years in banking, both in risk management and outside of risk management, if you had to summarize what the value of risk management is really making the bank better, making the organization better. It's good management to understand what is kind of at the most key issues in the bank so that the management team can handle it. And I would also say that, keeping the bank out of trouble when it comes to compliance or legal issues is another real basic reason why banks should care about it. The whole function of risk management is designed to ask one question: what could go wrong? And once that question, what could go wrong, is being asked, then in fact you could drill down further to say, hey, if these things can go wrong, how can we prevent them from going wrong? Or how can we offset the impact? Of one great example of that is cybersecurity. We all know we're exposed to cybersecurity issues, but with the right team in place, with the right software in place, those can be mitigated pretty significantly. So those are just a few thoughts. And
it sounds like you're really, one of the themes there is getting off the back foot and onto the front foot, getting ahead of issues before they arise, as opposed to being reactionary.
Yeah, that's a good point, Ed. The most valuable risk management activities are those that are forward-looking. What could go wrong in the future? And a lot of times you can look at the past and say, hey, we've had these large fraud losses. How can we prevent those for the future? So the past sometimes can help you in terms of identifying where to put focus, but there's nothing like knowing what the bank's current strategic plans are and how they want to address those strategic plans.
Thank you.